Every cycle brings new patterns and unexpected challenges. It's the reason why over 90% of crypto investors end up getting wrecked time after time. The 2025 cycle has shaped up to be completely different, and if you're still relying on outdated strategies, you're likely setting yourself up for failure. While some trends are easy to spot, others are more subtle and can quietly wipe out your gains if you're not paying close attention. In this video, I'll walk you through my ultimate exit plan for the 2025 bull run. I'll start by breaking down the 4 key indicators I'm watching to decide when to begin scaling out, and then explain how I plan to take profits using a pattern that hardly anyone is talking about. I felt this video was crucial to share because I want you to understand the specific shifts happening this cycle. These insights could help you avoid the same mistakes I made in 2017 and 2021. If that sounds good, hit like to support the channel and subscribe if you haven't already. Let's get into it. As many of you already know, holding onto altcoins into the next cycle is often a losing game. Most won't revisit their previous cycle highs and will continue to bleed against Bitcoin. That's why my plan is to exit all of my altcoin positions and a significant portion of my Bitcoin by Q4 2025 or early 2026, depending on how monetary policy unfolds. But relying on fixed timelines alone can be risky because markets rarely move on our schedule. This is why I'll be using 4 specific indicators to guide my exit strategy, helping me decide when it's time to start scaling out with precision instead of emotion. This cycle is unfolding very differently, with Bitcoin maintaining dominance in a way we haven't seen in previous runs. If you're still relying on outdated strategies, there's a high chance you could end up holding bags deep into the next bear market. You've probably heard about the Pi cycle top, MVRV Z-score, and other traditional cycle top indicators. While they worked well in the past and are still useful for spotting short-term froth, they might not flash the same warnings this time around. In this video, we'll go over some lesser-known indicators that are better suited for a cycle like this, one without an extended euphoric up-only phase. And just to be clear, this isn't about fully exiting the market and walking away. It's about gradually scaling out during peak hype and being ready to scale back in if we spot a meaningful trend reversal. So with that in mind, here are the 4 indicators I'm watching closely. One of the most overlooked but powerful indicators is the monthly RSI. It not only reflects the overall sentiment across the altcoin market, but is also a reliable tool for timing exits on individual coins. When RSI climbs above 70, it's typically a good point to start scaling out. 80 signals greed, and anything above 90 is extreme greed. For example, in both 2017 and 2021, ETH reached an RSI of 90 near its cycle top. The same logic applies to other altcoins. XRP hit 84 during its January pump, EOS touched the 90s in March and reached around 75 during its November rally. When these levels show up on the monthly chart, it's not about guessing tops, it's about recognizing when the market is overheated and locking in gains while others get greedy. Once RSI signals overheating, the next layer of risk emerges from leverage. This brings us to the next one. Open interest dominance is one of the indicators I've come to rely on heavily. This metric tracks how much leverage is flowing into altcoins compared to Bitcoin. When altcoin open interest starts climbing above Bitcoin's, it's usually a sign that retail traders are getting too aggressive, heavily leveraged, and likely overexposed. That imbalance is a warning sign. We saw it clearly in both March and December of 2024. Altcoin open interest surged past Bitcoin, and not long after, we witnessed sharp liquidations across the board. Smart money used that frothy moment to quietly exit while retail got wiped. When you notice that kind of shift, understand that risk is now elevated and it's time to start trimming exposure. This one signal helped me lock in a good portion of profits last year. Now let's talk about one chart that could trap a lot of people this cycle. That is Bitcoin dominance. This measures how much of the total crypto market cap is controlled by Bitcoin. Right now it's around 64%. In previous bull runs, dominance typically dropped as altcoins surged and took a larger share of the market. In 2017, for example, it fell all the way to 35% while altcoins went parabolic. When it dips below 50%, that's often a sign that alt season is starting to heat up. But if it climbs back towards 60% or higher, it usually means Bitcoin is pulling most of the liquidity out of the market. Since 2023, Bitcoin dominance has been rising steadily. Until it breaks below 50%, it's unlikely we'll see a full-blown alt season. In earlier cycles, we saw it fall to around 42% before things reversed, but that level may not be reached this time. Many traders will wait for that same setup and end up stuck holding bags. Personally, I plan to start taking profits once dominance dips closer to 50%. It briefly touched 54% during the December rally, but since then, it's been climbing steadily. One of the clearest signs it's time to start exiting crypto positions is when sentiment hits extreme levels across the board. When fear and greed index pushes into extreme greed, meme coins dominate headlines, and you see a wave of mindless spending across the board, it's often a sign we're nearing the later stages of the cycle. But beyond the charts, there's a growing social risk that acts as an equally important indicator. This is when YouTube views start exploding, follower counts on Crypto X accounts surge overnight, and engagement goes parabolic. It reflects peak public interest, not smart accumulation. When everyone starts tuning in, it usually means the trade is already overcrowded. Combined with other market signals, this kind of sentiment shift helps time exits more effectively. Maybe not by catching the absolute top, but by getting out before the crowd rushes for the door. Now let's get into the under-the-radar pattern in this cycle that almost no one is talking about. This pattern challenges the old cycle theories of diamond handing through the bull run. The usual liquidity flow we saw in past cycles hasn't played out. Liquidity has stayed concentrated in Bitcoin and hasn't trickled down into altcoins like before. In this cycle, altcoins are dealing with limited liquidity, making it nearly impossible for the entire altcoin market to rally together in a sustained way. Instead, we're seeing isolated sector-specific pumps like the AI run during the Nvidia hype or short-lived meme coin explosions. There have been moments of broader altcoin rallies, but most of them faded quickly. If you pull up charts for most altcoins, you'll notice two major rallies, one in March and another in November and December. Many of those gains were wiped out in the April crash. Even ETH followed this choppy structure. It ran to 4K in March, dropped nearly 50% by August, rallied again to 4K in December, and then crashed over 60% by April. That's a brutal cycle compared to 2021, where ETH and many altcoins went on crazy runs with only small pullbacks and little consolidation. It's not just ETH, another cycle leader like BNB also shows this stagnation pattern. This cycle is all about knowing when to scale out and being ready to re-enter if the trend flips. So how do we play this cycle? The way I see it, the smartest move is to take aggressive profits into Bitcoin during short altcoin rallies, then sit tight and wait for the dip. There's no one-size-fits-all playbook, but this is the strategy that's worked for me throughout this cycle. And just to be clear, this is my personal plan, not financial advice. If you're dead set on holding your favorite altcoin through the full cycle, that's your call. I've taken some heat in the past, especially from Dino Coin Maxis, just for pulling up charts that didn't fit their dream narrative. But if you're someone who genuinely believes in a project and you're not ready to sell after a 2 or 3x, just make sure you've got a solid plan behind it. With that said, let me walk you through how I personally scale out in this kind of market. If any of my altcoin positions hit 80 on the RSI, I immediately rotate 25% into Bitcoin and continue scaling out 5% daily until I've offloaded around 60%. If the RSI touches 90, I get more aggressive. 40% into Bitcoin up front, then 5% daily until I've trimmed 80% of the position. If the price drops back below my initial exit level, I pause the scaling. Next, when open interest in altcoins overtakes Bitcoins, that's another key signal. I start trimming positions that have seen decent runs. There's no hard cap here, but I generally split the proceeds 50-50 between Bitcoin and stables. I would take a similar approach if Bitcoin dominance falls below 55%. That's when I expect broader euphoria to kick in, and I'd rather be rotating than riding the hype wave blind. I also keep an eye on sentiment. If there is a talk of a dog coin hitting the Vegas sphere or meme coins start trending on Google, that's not alpha, that's exit signal. When things get that loud, I clip meme positions and shift into Bitcoin. Of course, no single strategy works for everyone. Every portfolio has different weightings and timelines. But the real edge comes from using these signals to stay a step ahead. That's what separates survivors from bag holders. Beyond the 4 indicators, here are a few important reminders. First, don't just set your take profit at a fixed number like $10 and wait for it to hit blindly. Instead, spread exit levels from $7 to $9. At each of those levels, take time to reassess and analyze the situation. Second, avoid vague exit plans. You need a clear system and the discipline to follow it. For example, a solid system might look like this. When a coin does a 2x, you take 50% profit and recover your initial investment. If it doubles again, take another 30% off the table. Keep the final 20% as a moon bag with a stop set at your break-even point. Sell everything if you see a strong reversal, a sudden parabolic 4x to 5x move in a single day, or if the sector becomes overheated or saturated. Another important principle is to respect real-life money. $10,000 in realized gains is worth more than 100,000 sitting unrealized on your screen. And finally, remember that survival is wealth. The people who manage to exit early enough are the ones who stay in the game long-term. They're the ones who get to re-enter Bitcoin after a 50% drawdown while others are stuck holding the top. If you want more real-time alpha that doesn't always make it into these videos, be sure to follow us on socials. Links are in the description. Hope this video helps you lock in gains and walk away a winner this cycle. Thank you for watching, and I'll see you in the next one.